Good evening, everybody. Anyways, all right. So, what we're going to try to do is kind of evaluate what should be going on in this type of market. We can see that the Dow has come out of this kind of wave two, going into wave three with a flutter kicker. But today, in the overbought condition, we had not quite a shooting star, but a shooting star, oh, close to a shooting star, and it gapped up. So that gives us a little bit of a warning that we should probably start watching for maybe some profit taking in the Dow, because we're already seeing it over here in the Nasdaq with the left-right combo, now a bearish engulfing signal below the T line. That's usually a good indication there's going to be some more downside. The warning is that over gap up in the overbought condition. You got to remember, Greg, that all those inputs into computers are all done by human input. So when they put in what they want to see, it's based upon human nature. So just because the mechanics are more automated doesn't necessarily mean the formation of those mechanics are any different. Okay, so let's take a look. Paul, hold on to your individual signals until when I tell Jim to do the double line. Um, yeah, usually uh, uh, Dow or the New York Stock Exchange stocks are 1, 2, or 3 letters. The NASDAQ is usually 4 letters or more. Um, the Dow is extremely misleading with this action. Well, you got to remember, let me go backwards here. Remember, the NASDAQ was going up a while back. At the same time, uh, at the same time, the Dow was drifting lower. So what it's really telling us is we've got one index moving up, and we've got the NASDAQ moving down, and we've got the S&P kind of going flat. So it's basically telling us that there's no money coming out of the market. There's no money going into the market, really. So they're just kind of shifting from sector to sector. So um, they so the function that we want to do during these type of markets is find out which sectors are or which stocks are acting the strongest or weakest, depending on which way we want to go. All right, some of the other indicators, you can see how the crude oil had the bottle breakout, likely heading back up here to the 200. But at that point, make this small enough. At that point, you want to see what it does here because it resisted here at this level. So it's broken this downtrending channel, and it did that on the bobble breakout. Now you want to see what happens once, and I say you want to see what happens when it gets to the 200. Everybody's chart in the world has the 50 and the 200 on it. And so when it gets there in the overbought condition, if and when it gets there, you want to see what type of signals occur or formations to tell you whether they're going through or whether that's where everybody decided they're taking their profits. Let's see. Uh, 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 uh. Getting into a different System with a computer. Okay. Let's see. That was crude oil. Been playing a few of the futures. You can see what's happened in the live cattle ever since the doji gap down. Lean hogs still selling off. And notice how it didn't support at the 200 today after a big bearish engulfing signal. Want to stay short on this one. How can you tell if smart money is manipulating? You don't. Smart money doesn't manipulate. It's yeah, and you're not trying to decipher everything that's out market, whatever you're trading, whether there's big short interest out there or anything else that you want to add or think would be a incentive or a reason to move the price. Doesn't mean a hill of beans, because the only thing you're really interested in is what is the price doing. So everything else is just kind of, what do I want to say, just kind of insignificant information. The only information that you're really looking for is what are they actually doing. So if you're looking at a stock and it has a big short interest in it and it's going down, that's not a reason to be buying because it has a big short interest, because they're still selling it. Now, if you see a buy signal and a big short interest, that might be a little bit additional fodder for thinking it's going to go higher. But the only real basis that we're looking for is what's actually happening and what's going on in the buying and selling decisions, not all the background stuff. Okay, so some of the ones that we're holding is General Cable. Ever since it did a gap up through the resistance level, it's still in a 45 degree. And NVCR, you can see kind of the J-hook pattern. You can see how they came back up through the T-line with a booster, that being the booster tail, making a J-hook pattern. Now, here's one of the things that there's nothing you can do about. Today, Hertz got, somebody downgraded Hertz. So I was a little bit remiss today to say, all right, wait and see what happens. Well, the first thing you can do to wait and see what happens is if it opens lower and starts trading lower, close it out. What's the worst case scenario? It starts coming back up through where they open it. So I didn't think fast enough to let everybody know, because I was more trying to show the results of a downgrade. Is usually they take it down, and after all the selling is over, they take it right back up into the continued trend. But on a short-term basis, the right thing should have been today, when they gapped it down from a doji and trading it lower, it doesn't matter why they're selling. In this case, they downgrade. You know they're selling, so you close it out, and then you just wait for it to show signs of buying again. Now that was on Hertz. There was a reason for it to sell off. IMGN has a very nice looking chart. Looks like it's going back to the top of the trend channel on this little kicker type signal breakout on Friday. Today it opened positive and just kept selling off. And I kept looking to see if there was any news to sell it off, and there wasn't. So when there's no news, and they've sold it off that hard. Wait to see what they do. If they open it lower tomorrow, you close it out because that means they're still selling. But I think after hours it showed it was already trading at the 6 to 608 level. They were already trading at positives. So on a day where you don't see anything, you've got buying, you got your stochastics starting to head back up, you're off a support level, give it an extra day just to, you have no idea why they sold it off this hard. Now, we know what usually happens is when you get this late in the day and it's trading down here, then you got the panic sellers that are selling. Now, earlier today, somebody said, where do you put your stop? And the true spot to have put a stop is right here at the previous day's open. Because logic says if they come back down through the previous day's open after a strong buy, that the buyers aren't staying around. So you close it out. What would be the worst case scenario again? Trades down, turns around, and comes back up through that level. You get right back in at the same level you got out. But when you got back in, you knew which way it was heading. It was starting back up again. So that's just a long explanation to say that if you see what it's doing, do what I've initially said, oh, that was more on Hertz. Do what the chart tells you to do, close it out, you can always buy it back. Okay, let's see what else we have. We've got Glob, which is kind of doing a J-hook pattern setup. Notice you kind of a little scoop pattern. And FRTA, still iffy. It's right here on the T-line. It's trading indecisively. It has to remain positive. Jim, hold on to your individual ones. I have Cray in here somewhere, I think. But wait till I tell Jim to do the double line. Okay, the biggies, like Labu, you can see where it's going. Absolutely nowhere right now. So that tells you that the biotechs probably aren't great buys at this point. On the other hand, you've got Nugget, kind of lollygag today, but you can see that it's coming back up. It's up through the 50. I would suspect it's coming back up to the 200, which would be kind of equivalent to this little resistance level. And Amazon, this is why you always want to see confirmation that things have changed. We had the big dark cloud the day that they were going into their earnings. After hours when they announced their earnings, it had gapped down. But notice when it gapped down the next day, where they couldn't trade it. They couldn't get it back up above the T-line. And when they opened it lower again today, that told you the bulls weren't there still. More than likely, this force was still pushing the price lower. This is more obvious. This is Tesla. Where did they fail? Right smack dab off the 50-day moving average with a bearish engulfing. Now you got a bearish doji sandwich. Let me do this just to see if I can do it right. You kind of had that trend support, and it broke through that. There's a good possibility that you're in a blue ice failure, which means that could be your next target. Your first target is going to be right here at the lows. If it breaks that level, then they're heading down to the next target. Nugget. Not really, no. And again, you're not quite in the overbought area. So that wasn't a bearish Harami. Remember, a bearish Harami has to open below the close of the previous day and close above the open of the previous day. This one actually, that's just kind of a little pullback day. Apple, another one that did a big left-right combo failure. And I think you could probably do that. So this is where, they report tomorrow after close, all right. This is where kind of draw a line, and then you see indecisive trading at that level. Remember, some people are watching the moving averages. Some people are watching trend resistance levels. We have the advantage of seeing what actually happens at those areas that everybody's watching. So right now, yeah, if they keep moving the Apple lower, I would kind of suggest they could be coming all the way back down into this area. Netflix. What happened there? Netflix. Another one that bearish engulfing. And today it closed back below the T line. You can short this on weakness. Where's the next likely target? Well, you could be coming all the way back down to the 50. First target would be probably this level. But if they start trading off weaker, and the problem with some of these, well, the biggies haven't been influenced so much by the political aspects of the of Washington, because the market can move around. If they come out with an announcement that something great has happened in the politics, the markets can soar up again. Or if something didn't happen, it could pull back off. So not the market direction is being highly influenced by what's happening in Washington, D.C. But that's the whole market in general has been influenced by what's been happening in Washington, D.C. Again, that's probably the stimulus for this rally. NVIDIA, when it closed below the T-line, that was a good indication to get out. Because when they close below the T-line, there's two factors that you have to consider. One, we know the probabilities, but if something closes below the T-line, the probabilities are pretty strong it's heading in the wrong direction. Second is when it closes below the T-line, notice what happens to the trajectory of what we are expecting. And it's gotten diminished or reversed. Okay, but there are things that still allow you to keep the probabilities in your favor, like a pattern, such as the fry pan bottom. This is BOFI. You can see where it kind of broke out here at the 200 and this level right here. I guess I could do this. I told us there was more upside. So it's not unusual when you get close to an end of a fry pan bottom where you start seeing a little bit of whipsaw action. SOFI, or SOFU, you can see the fry pan bottom. Where did it break out? Right about here, right where the fry pan bottom started. Yeah, if they, I don't know. Are they going on vacation or are they staying around to fix healthcare or tax thing? I don't know. Doesn't really matter what the information is because it usually doesn't stay the same way. Here's another fry pan bottom on GNCMA, General Communications. When it broke out through this level, it told us we're in wave 3. So I'm illustrating, there's Cray. Illustrating these, because notice what happened on Cray right here at the breakout level. Open lower, big bullish engulfing. You can still be buying this one. That's a fry pan bottom breakout. You can see what happened on this fry pan bottom. YRD broke out. Oops, I guess this is right at that level. And notice how the breakout occurred. Look at our little doji best friend gap up. So again, this is where you can get past that fear factor of you're in the overbought area, but if it's coming out of a pattern, you get 2 or 3 benefits of identifying a pattern. One, it's usually not going to be affected as much by the overall general market. 2, you can see right where it breaks out. And 3, if it does break out, this is the results. You usually get a very big price move. Now, there's lots of times where you get up to that price move. If this had opened positive and did a bearish engulfing signal, that would have given us a completely different message. They weren't breaking out. You close out the position. Ooh. Oh, this one was supposed to be, it's more of a breakout of this little area. Now look at the J-hook pattern. This is HT. So that's why I'm showing the patterns, because if you can just recognize the 5 or 6 patterns, you're going to put yourself in situations where the probabilities are much greater that you're in the right spot at the right time, but the magnitude of return of being in the right place at the right time is going to be all that much greater. Okay, what else we got out there? This is a good-looking chart. MYGN. Let's get this thing off of here. You can see right where they're reversing this. And this is where knowing what type of signals are occurring at important technical levels. And important technical levels are levels that everybody else is watching. Had an inverted hammer type signal, started this wave. And this is just simple logic of if you're an institution and you're ready to buy 785,000 shares of this stock, and you see it, you like it, but you're seeing it's pulling back, where do you think you're going to start pulling the trigger buying? As soon as you see whether it's going to support on the is it going to be showing support on a level that everybody else is watching, like the 50-day moving average? Tim, no, it's not a factor. We're not interested. Me not knowing, or anybody not knowing, that there's a big short interest or no short interest doesn't mean a hill of beans. All we're seeing is that they're buying at this level. I saw a few people get into Freds early this morning. That's got a nice little bottoming action. Now, if you bought it with it staying up above the T line, you still need to see it stay above the T line. But if it gets moving, there's your first target right up here at the 50, which in this case would be a good 50% upside potential. Yeah, short interest has a benefit as that it could add strength to a price move. But that's, again, when you're looking at the chart, you're not looking at the chart because it's got a big short interest. You're looking at the chart because somebody's starting to buy. Now, the other ramifications of people buying could be you start squeezing the shorts. But the more important analytical value is, where are they starting to buy? Right here off the 50-day moving average, giving you the prospect of a wave 3 in progress. We did a session of, I can't remember. Again, look at your fry pan bottom breakout. That started your uptrend. Look at your best friend signal. We did a session, can't remember, not too many weeks ago, on big breakout moves, what to do afterwards. Well, on this day, if I wasn't in on here, I wouldn't be in here. You want to see it trading higher. Well, look what happened today. The profit taking of Friday has been negated. Now what can we expect? Probably a 45 degree, which would be the same trajectory as what this trend was doing prior to the consolidation. So that one's on the recommended list tomorrow. No, it isn't. It's MYGN's on the recommended list tomorrow. What did I just do? LPSN, okay. And RDC, you can see there's the downtrend. You can see the bobble. You can be buying this one on positive trading because that would tell you have a bobble breakout. You've broken the downtrend. You've also broken the 50-day moving average. And look at your T-line crunching you up through that level. Oh, it was 2 Higgins? Okay, thanks. I keep forgetting what we do on what weekends. Oh. And OPK, another one you can get ready to buy. Notice what's happened here, a Morningstar signal. And where's it occurring? Right smack dab at a 50. So if it opens positive tomorrow, what's it telling you? You've got a little bobble breakout. But if it breaks all this downtrending resistance, where's your next likely target? Possibly up to the 200-day moving average. CSTM, another case where you had a J-hook pattern. And what was the element that kept you out of this, that they couldn't break out? And where did they bring it back to? Right smack dab to the T-line. Now they're taking it back up. Now it becomes more viable that if they break out or start buying, you can be buying this because of the J-hook pattern, wave 1, wave 3. So this is, again, the importance of recognizing what human nature does time after time, where they're buying, they're selling, and starting to buy again. We can recognize the pattern that it's developing. GGG, kind of the same scenario. I put this next to the wrong one. What was the other one that we were looking at? There's your kicker signal. There's telling you probably have a 45 degree in progress. Just the fact they took it up, did profit taking, and then the next day they told you the profit taking was over after that strong buy signal, the kicker signal. There's probably more upside. WAIR, there's your left-right combo, almost bouncing close enough to the 50 to say that's where they were buying. If it opens positive tomorrow, breaking through this level, we know wave 1 and wave 3 should equate to coming up, filling this gap right here at the 200-day moving average. Oh, on here, whoops, I think it's DJT is the transportation index. And I would suspect getting in the oversold area, you're getting that close to the 200, they're going to test the 200. So dumpling top, not so predictable anymore. MT, I don't know why that is. Why you would say that. They're just as predictable as ever. It's just the opposite of a fry pan bottom. Okay, Hertz got battered, so Avis kind of followed suit. So if this opens lower tomorrow, as well as Hertz, you close out Hertz. Now you can either go short. I'd be more apt to go short on Avis. Notice all the dojis, the shooting stars, and then the failure here at the T-line. I would suspect they could come back down here to the 2 previous charts. Oh, I don't know which ones they were. Oh, this is a dumpling top. Yes, it would have been a good dumpling top, except something happened and it created a kicker signal. I forgot one here. Is this IVC? IVC, your best friend, your breakout, Profit taking over, look for a 45 degree off of here. CLVS had the potential of a scoop pattern breakout, but anytime you see that kicker signal, remember that's going to be a strong strong move to the downside. And Logi, another one where it's got the kicker signal. You stay short until you see a buy signal. IBM, we recommend going short on this one after the kicker signal. Right now, it's in the process. It did a little bullish harami today. If they open this one higher tomorrow in the oversold area after a bullish harami, all right, we take our profits. We close out the position. MITK. There was your shooting star, bearish confirmation, bearish confirmation below the T line. Look for that one to come back to the 50. Pandora, kind of the same scenario, left-right combo, bearish doji sandwich. First thing you want to watch is to see if you're going short, see if they can get through the 50. You can see how the 50 acted as a resistance, and there was your bobble breakout. Now they'll come back and see if it's going to act as a support level. Flexion, bearish engulfing, bearish doji sandwich. Look for it to move back to this level. Let's see. Cons, shooting star. Now you've got kind of a bearish scoop pattern. That could have a slingshot effect, at least back down to the 50-day moving average. So all these patterns that we can see both on the bullish side or the bearish side just give you probabilities. Look at the slow curve on Revlon. Slow curve, break down through this level. Right, your next target could be somewhere down in this range. And I point that range out because that's nothing more than looking at what everybody else might be looking at. PTLA, bearish signal. I don't know what this one is. Another one that could bring you all the way back down to the 50, giving you a good percentage move to the downside. CBay, we made good money on the way up. Then we started seeing sell signals. Your doji, your hanging man, doji, bearish confirmation. Where do you think it was going to move back to? The T-line. What do we want to see at the T-line to get back in? Needed to open positive and trade positive. Right now, they may continue to sell this off also back to this congestion area, which would also coincide with the 50-day moving average. XON, bearish doji sandwich, broke this level. Next target could be down in this area. So lots of, now I say lots of sell signals. There are times, and this is kind of an indicator of what investor sentiment is doing overall. When the market is moving up steadily, you can find a lot of good buy signals, but you might find very few good sell signals or short positions. Now we're starting to find lots of good sell signals or bearish charts. So just logic says if you're starting to see a lot of good bearish charts, that you start watching to kind of shift your portfolio orientation to maybe being predominantly long to at least 50-50 or getting a little bit slightly to the bearish side. Meaning if you've got 10 positions on, you might now be shifting to where you've got 6 short positions and 4 longs, and the 4 longs are ones that haven't shown sell signals yet. Here's another dumpling top on Angie's list. If this opens lower, start watching for a breakdown. And RGNX, you can see the bearish engulfing. Doji sandwich. First target, I would suspect down here somewhere. Again, you're looking at charts where the probabilities right now are starting to set up to where things might be moving lower. This is ultra clean. Oh, UCTT, hanging man, bearish engulfing. Now confirmation of the bearish engulfing close below the T-line. First target right here. Second target could be down here toward the 200 on this lower channel. Yes, John, on a gap down, lower open, you've got a very strong percentage that it's going to go lower. Now, it may only go lower for a day or two, but that's where you continue to use your candlestick analysis to see if that's where the buying has come in. And until you see a confirmed buy signal, you just stay short. Weight watchers, bearish engulfing, bearish engulfing, bearish engulfing. Where's the likely target? Back here to the 50-day moving average. PI. Here's your slow curve dumpling top. Sell signal confirming the doji. Bearish engulfing. If this one opens lower, another one that's got a good percentage move back down to the 200-day moving average. That one's probably being recommended tomorrow as a short. And this is where you see the force. When you see a doji gap down, that tells you there's a lot of force to get out of that position. Another one that probably coming back to the 50. HBDT, HABT. How did I do that? Notice the doji today. You have a bearish engulfing, failure, and now you're sitting right here on the T-line. Stochastics heading down. If this opens lower and trades below the 200, what's all the information you're going to get from that chart? One, you probably have a bearish doji sandwich. Two, the 200 is not going to be acting as resistance. Three, your stochastics tell you you're probably coming back down at least to test the lows and maybe going lower. And Kara, you can see how they've come up and failed the T-line. Today they actually came up to the T-line. Notice where it failed, right smack dab on the T-line. If this opens lower, you still got a decent percentage move coming back down to test the lows. So with these market conditions right now, the Dow is starting to look a little bit iffy, especially with the warning of the gap up. And your NASDAQ is telling us they're starting to sell those stocks pretty heftily with a bearish left-right combo followed by another bearish engulfing. That if it came back down to test this level, which is essentially back here to the 50, that's telling us we've got maybe 3-4 days of downside, which means any long positions that are starting to sell off, you close them out and then add a few short positions until you see support or a buy signal. Okay, that's about all I got tonight. Are there any general questions on candlesticks? All right. Are you still using indicators ADX? Now use stochastics. And the three EMA is the 3 exponential moving average. Now, that's not to keep you from doing whatever indicator you want. The nice thing about candlestick charts is we know the charts work. Whatever you add onto your chart to see if that is a helpful confirmation, you can put on. If it doesn't work, you take it back off because you know the underlying factor is that the charts work. what we're trying to do is each time we add another indicator, it should be helping the confirmation or the probabilities that signal is confirming. I think the two that I've picked out is PI, if it opens lower, and Angie's List. Now, the whole point of showing people how to do their own scans is I've just picked out these two. There's probably 8 or 10 good short positions tomorrow. Just have to pick out ones you think have the best probabilities, number one. Number two, the best profit potential. So now, if Angie's List opens positive tomorrow, probably not going to be shorting it. If PI opens positive tomorrow, probably not going to be shorting it. And if the market is opening lower, that meant the 6 or 8 others that I came up with, you want to have access by doing your own scans to pick out or have those on your watch list, because it might be something. I'm just going to pick out one. Let's say UCPT is gapping down tomorrow. That means you probably want to be shorting that one. If you're looking, depends on your time frame. Yeah, if you're looking at this on a monthly basis, it means you're going to sit with it for a while. If you're looking at this on a day trade, or not a day trade, but a swing trade where you're going to hold it for 2, 10, 12 trading days, yeah, it doesn't matter what your monthly's doing. All right. The homing pigeon is just a harami. The only difference is let's say a harami forms tomorrow. That would mean it opened positive and closed slightly lower, so created another dark candle, but it would be a, I did it in the wrong spot. It's where the colors of the candles are the same, but it's still a harami, meaning it's opened. Let's say, for example, right here, you had a dark candle. Let's say it had opened the next day here and closed here. That's a homing pigeon. It's not quite as strong as a bullish harami, but it's telling you that the selling may have stopped. Then you look for confirmation. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.8 seconds, do the other double line. CC, Chalmers, you stay long as it stays above the T-line. Don't let it close below the T-line. And Momo, same scenario. You stay long on this one. You can see kind of the fry pan bottom. Just don't let it close below the T-line. Facebook, probably coming back to test the T-line. If you're long, I would stay long, but I would definitely do not want to see it. Now, the warning was when they gap this up in the overbought condition and they're selling it off, that means there's not a whole lot of strength showing up right now. Get ready to take profits, especially if it closes back below the T-line. Google, stay short. Notice your gap down. More than likely, it could be coming back to the 200, which would be kind of on that support level. Sherwin-Williams, stay short. Oh, target, don't know. I would suspect at least testing these levels. But at this point, if there's really no target that you can hang your hat on, you stay short until you see a candlestick the candlestick reversal signal. Same scenario here. Now, you're getting close to the oversold area, so right now you stay short. I probably wouldn't want to see this trade back up above today's high. That would tell me after a couple of dojis they're still buying. Probably the short has now run out of steam. Nugget, stay long. Use the T-line. Just, apparently you stay short. Use the T-line. Leg, stay short. Especially where they did the doji gap down through the T-line and basically down to the below this resistance level, gapped it down again. So all you can do right now is stay short on this one. Oh, Greg, got to remember, you've already given up a good distance and you're getting toward the oversold. So if you shorted on weakness tomorrow, you're just going to have to be a little bit more diligent. Make sure it doesn't reverse on you. Same scenario here. You stay short. I wouldn't necessarily be going short, but this was expected that if it opened lower after this big gap down, it was going to trade lower. So if I was short this one, I would stay short until I see the first buy signal. Iridium, same scenario. I'd suspect the 200 is the first target. And CAA, same scenario also. This one, if it opens lower, you can still short it because it's not going to hold at the 200-day moving average, especially on that gap down. Vail, you stay long. At this point, with stochastic starting to climb back up in the oversold area or overbought area, I'd have my stop at today's low. I wouldn't want to see it come back down through that level. And NAVX, this one was more that when they came back up, this is when you get to the oversold area, start using the previous day's open as your stop. So if you didn't close it out, oh, you couldn't be short on this one because you're a dollar stock. You shouldn't be in it. Shouldn't be in it until it comes back up above the T-line. CX, nothing here. If you're short, you should have covered it today. I wouldn't be going long until it comes back up above the T-line. And VIPs, you stay long. Just watch to see what it does once it gets up to the 50. The VIX still hasn't been able to get back up above the T-line. You stay, if you're short on this one, you stay short. Johnson & Johnson, still not going to be a very exciting trade and probably not real exciting until they can get up through this level because you're, again, in this kind of sideways congestion. So I would be trading something else until it can break out to the upside. Comcast, you can be buying this one, kind of a bobble breakout on that best friend gap up. And Fossil, stay long. You can see the big fry pan bottom. You can see the T-line crunch. You stay long as it stays above the T-line. Boot, you stay long on this one. And a little scoop pattern, double bottom. I would stay long on that. NXE, apparently not a very, you can stay long on this. You can be buying this one on positive trading. Just make sure on a $2 stock, your volume is pretty hefty. BTU apparently is not working. Oops, now it's working. But not very fast. So I'm going to go on. Ocular or Aclaro, nothing. I wouldn't be long or short. No direction. And whoops, humbug. EVAX. Boy, this looks like it did it. One price yesterday. Is this a buyout? I would probably, if this opens lower tomorrow, if you're in it, I would, yeah, kind of a fry breakout. But I'd be ready. I mean, that was a significant move. I'd be ready to start taking some profits on this one, especially on a lower trading. CTRL, nothing here yet. You had the dark cloud. And right now, with it closing below the T-line, I wouldn't be out of it, or I wouldn't be in it until it closes back up above the T-line. FEYE, stay short, especially if it opens lower tomorrow. It would be breaking this support level right here. Rig, it's got a T-line crunch in progress. You can be buying this one if it comes back up through today's high, because that tells you the bobble breakout is in progress. Under Armour, nothing here yet. Notice that you close right here at the T-line. If it opens positive, I'd still want to see it break this downtrending channel. So I wouldn't be long or short on this one until you see a little bit more strength. And Abercrombie, you can stay long on this one. Just use the T-line as your stop. Amazon, as we said, is probably testing. It didn't hold at the 50. If you're short, you stay short right now. You shouldn't be in this one until you see at least a buy signal. LNG, you're right here on the 200 in the oversold area. If you're short, you get ready to cover this on positive trading tomorrow. Then you don't want to see it. If you can short, or you can cover it if it opens positive, because it's kind of telling you they're supporting up the 200. And then if it opened positive and then traded back below the 200, you can reshort it. But right now, it's looking like it's trying to support in this area. Starbucks, stay short. Bearish kicker signal. Was ahead, but made the mistake of holding through earnings. Now 80% long. Should I call it? Lesson learned and get out. And since I lost most of it, stay put. I have September 55 calls. September 55 calls. Boy, I don't know what to tell you there. I guess, I guess the whole function of identifying or using the candlestick charts is to see whether you should be long or short. Right now, it looks like you should be short. So if we woke up tomorrow and the pre-market futures were showing the Dow's down 60 and this was opening lower, I'd close out whatever you have left. And that's where you have to start watching for the next buy signal, because you might not want to be in the 55s if it turns around and heads back up. You might want to be in another strike price. Allegheny, you just stay long as it stays above the T-line. AIR, big Morningstar type signal. You can be buying this one. It's not going to be very exciting, but at least you'll be in an uptrend. Waddle and Reed. Again, if you got out, you can get back in if it opens positive tomorrow. Just use the T-line again as your stop. And COF, this one you can be buying on positive trading. Your J-hook pattern best friend starting back up. So again, here's a case where you had the big gap up, nothing, nothing, nothing. Now the profit taking is over. They're starting back up, and that was based on strong up move based upon this. Now it's time you can get into this one. Visa, another one that if you have stayed in it, you can stay in it, but you don't want to see it close below the T-line. If it closes below the T-line, you've got two things: closing below the T-line And 2, telling you they're probably now coming back to the bottom of the trend channel. And buckle. Nothing here. I wouldn't be long or short. Nothing, no trajectory on this one. G-Pro. Not a great chart either. Oops, that's a dark candle. I would be more apt to buy it if it came back up through today's high, which tells me they're breaking this little trend channel. But right now, there's nothing real wildly exciting about that stock. Tractor Supply. If this opened lower tomorrow, I'd close it out and wait to see if it's going to come back and test the T-line. To buy it, I'd want to see it come back up through this level. So if it opened positive and started trading positive, that's when I'd start going long. LJPC, stay short. SRPT. Right now you can be shorting this with the expectation that it's going to come back down and use the top of the wedge as support, which would kind of coincide with your 50-day moving average. And HRTX, stay short. You can be shorting this on weakness. Again, the targets being the moving average, moving averages. MBOT, nice fry pan bottom. Just make sure your volume is real hefty on that fry pan bottom on a $1.40 stock. And Teva, nothing. If you had been in it, you should have been out of it yesterday. What is today? Today's Monday. Should have been out Friday with it trading below the T-line. Again, what's it telling you? It's moving sideways. You don't want to be long or short this one. I think we did this one, didn't we? Yes, you can go short on weakness. AG, you stay long. But again, you want to see this open positive. If it opens lower, you're still caught in the sideways channel. Was ABX. That one's a little bit more lively. I'd be a buyer of this if it came up through the 200-day moving average. Amdocs, you can stay long on this one. You got the fry pan bottom. It's not going to produce a huge, big profit for you, but it's heading in the right direction. Still use the T-line again as a stop. NSC, NCS. As long as it stays above the T-line, you can stay with this one. VRX, you should have been out of on this day. Now you could, looks like you could be going short with the expectation. I don't know whether they, no, they haven't filled this gap yet. And if they come down through there, more than likely they're heading for the 50. The Tile Shop, here's a case where if you started buying, you watch to see what happens when it got to the T-line. So if this one opened lower tomorrow and you'd bought here in the last couple of days, close it out. They're failing at the T-line. JP Morgan, nothing. I'd be someplace else, no direction. MDXG, kind of the same scenario. I probably wouldn't be involved with this one until it breaks out through the top of that resistance level. What did I just do here? I want to see it. Get through the tops. Right now, it's not moving in any direction. MT, I don't think I can get that on this system. Here, big Morningstar signal. You can be buying this one on positive trading. Not going to make a whole lot of money with it, but it will be moving in a bullish direction. FEYE, stay short. Tesoro, stay long. That's a nice little starting wave 3. INST, stay long on this one. We've got that one in the portfolio somewhere. And Cray, you got the big bullish engulfing coming out of a fry pan bottom. You can still be buying this one on positive trading. And Microchip, get ready to go short if this opens weaker tomorrow. Oh, you already said that. And Serve's a big breakout. Let's see what the bigger chart looks like. Yeah, I would suspect you could be on a 45 degree, the same trajectory. Notice what happens. You get a trajectory, pulls back, stays in that trajectory, pulls back, goes back up to that trajectory again. Radius, let's make this bigger. This one has to open positive. It's not a great reversal, but it's bouncing off the 50. It has to open positive tomorrow to stay in it. And CTL, another one that if you're in it, it has to open positive. NVA, not coming up. Cyber, you can get ready to go short on this one on weakness. Costco, good little breakout. I would anticipate the target right now is the 200-day moving average. ConAgra, just stay long, but notice you're kind of losing steam. It should not close back below the T-line. As a matter of fact, when you're starting to lose steam, I wouldn't even want to see it trade back below the T-line at this point. Silver, stay long. So you see a sell signal. Valero, another one that you could be buying. It's not a great chart, but it's heading in the right direction. Yeah, Z, if you want to know when the earnings are coming out, and then if they're announcing after hours or before they open the next day, you definitely want to see what they're doing going right into earnings. If they're starting to sell off, like we saw on Amazon, a dark cloud signal, that tells you they were selling going into the expected earnings. It was a good time to close out the position. Because now your risk reward is too great. A lot of people say, oh, what if they came out with great earnings? Yes, but somebody that knew more than we did was selling the stock going into the close. What did I just do? TMOS, you can be buying this one still. Nah. I'd be someplace else right now. I don't even know where I got that symbol. Way down there. Did I do? No. USO. No. USO. Yeah, the oil fund. This is the September. You can see after the bobble breakout, I would still suspect it going to the 200. Did I do Zynga? What did I just do? Zynga? Nothing. I wouldn't be long or short on this one. You should have been out a couple of days ago when it closed below the T line. ICPT, kicker signal to the downside. You could be buying puts on this one tomorrow. Yes, a bearish kicker. NVAX, drug approval, all right. Is it trading up after hours? Kinder Morgan, another one that you can be buying expecting a bobble breakout, but I'd be more apt to buy it now if it came back up through the 200. And TECK, you can see the J-hook pattern sending you into the next wave. Just stay long until you see a sell signal. All right. Okay, last one, IMMU. Nothing here. Wouldn't be long or short. It's probably drifting sideways waiting for the 50 to catch up. But right now, you don't know whether they're going to take it down, sideways, or up. I'd be someplace else. Yeah, the biotechs are acting weak. You can see in Labu that there's really no strength. Okay, so what we want to see tomorrow is how they open. If they open this market weaker, especially in the Dow, that means your other indexes are going to be heading weaker. And if they start heading weaker, I would suspect you're going to have 3 or 4 days of pullback. So with that, everybody have a good evening. We will see you bright and early in the chat room tomorrow. We'll see you then.